Good evening, dear colleagues. As always, it's Sunday, and as always, it's then Strelkov and the ForexTimes project. As usual, we will review the potential movement of trading instruments for the upcoming trading week. However, once again, I would like to traditionally invite you to the ForexTimes community, where you will find unique forecasts based on data from the Chicago Mercantile Exchange, target levels, triangles as penultimate waves, consultations, and trading recommendations. Join the ForexTimes community. I will be glad to see you. So let's begin with the euro dollar. According to the Commodity Futures Trading Commission, we are seeing a 40% increase in buyers and an increase in the capitalization of the trading instrument. This tells us that the trend is upward, with a significant increase in the number of buyers, and the capitalization has grown to $242.352 billion. What do we actually see on the chart? Friends, we observe a lot of interesting things. Firstly, there is a new strategic target level of 1.150. Friends, here we have a large accumulation of option contracts worth $71 million, $76 million, $120 million, and $257 million. Additionally, there are hedging call options here which represent the maximum open interest in call option contracts. These contracts are used by professionals in Chicago to hedge their futures contracts for sale. And what's most interesting is that when the trading instrument declined on Thursday, the professionals who hedge these options, which are a strong support level, adjusted their expectations not downward but upward. This indicates that professionals are expecting further growth of this trading instrument. But how do we catch this growth, friends? The fact is that if we count the corrective waves, we get 4, 5, 6, 7. And it might seem like, oh, then look, this is a zigzag. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56, 57, 58, 59, 60, 61, 62, 63, 64, 65, 66, 67, 68, 69, 70, 71, 72, 73, 74, 75, 76, 77, 78, 79, 80, 81, 82, 83, 84, 85, 86, 87, 88, 89, 90, 91, 92, 93, 94, 95, 96, 97, 98, 99, 100, 101, 102, 103, 104, 105, 106, 107, 108, 109, 110, 111, 112, 102, 3WX, and 1, 2, 3Y, and the corrective structure is complete, so we can start buying. However, friends, the thing is that this structure could also be in the form of an impulse, followed by a correction in the form of a flat, and then a continuation of the decline, resulting in an A, B, C corrective structure, after which there will be growth. Friends, I can also draw both an initial diagonal triangle and a final diagonal triangle, but that won't lead us anywhere. So there are two possible scenarios, but the key element in each is an upward impulse. The first scenario, friends, is that the corrective structure is already complete, and we get an impulse, a correction, and then place a buy stop order above the impulse with a stop loss just below the base of this impulse. This is the first option. The second option is that I really hope for a deeper correction, because the greater the correction, the more profit we can earn on the purchase. I also like the market maker's loss level at the lower boundary of this market maker's profit range. It would be great to see the correction in the form of a flat, then see another impulse movement to the market maker's loss level, followed by an impulse, a correction, and then placing another buy stop order with a stop loss just below the base of the impulse. These are the two scenarios we will work with in the upcoming trading week. And I remind you that the strategic level is 1.1350. Gold, friends, gold on a global scale is not forming a triangle on the weekly time frame. Let's see what we have at the moment. Currently, you remember the formation of a triangle, right? Before the triangle, we had a persistent upward trend. Consequently, the impulsive movement before the triangle represents the penultimate wave, and this suggests that it is likely developing as a final diagonal triangle. This leaves us with the question, just as it was a week ago, has the fifth wave ended or not? The thing is, in a final diagonal triangle, the fifth wave can be truncated, meaning it might have already ended and the price could start to fall. Moreover, in the event of a decline, friends, you are well aware that, as I mentioned last time, our strategic levels are at 2400. This is a cluster of $300 million worth of put option contracts, and at 2410, a cluster of $774 million. However, we also have a new level at 2350, which is a cluster of $1.4 billion worth of call option contracts, plus the hedge of put options. This represents the maximum open interest in put options, which professionals use to hedge their futures purchases. So we figured out the strategic levels for selling. Now, what should we do for the upcoming trading week? The fact is, if we look closely, we'll see a situation similar to that of the euro. Professionals hedging put options have revised their expectations upward, which suggests that gold is very likely to renew its maximum value up to the level or range of 2,588 to 2,600. Up to this range, gold is very likely to update its maximum values before reversing downward. However, friends, remember that since our strategic levels are already outlined, if you know how to manage your capital wisely, you can already start trying to sell gold gradually. This is simply because an impulsive movement could easily form here. Let's see how it might happen. The first wave, the second, then 1D, 3, 4, 5, the fifth wave within the third wave, then 4, 5. Friends, if we see such a structure in a downward movement, this will already be an impulsive movement in wave A of the large corrective wave. After this, we wait for the correction and start selling with sell stop orders in the hope of reaching the levels of 2400, 2410, and 2350. Consequently, the fifth wave might indeed be truncated. If gold goes on to renew its maximum values, then great. Our profit from selling will be even greater. If anyone is very eager to buy, I suggest waiting for the formation of an impulsive move and correction and then using buy stop orders. Let's look at the levels for direction. Based on monthly option contracts, the range is 2,588 to 2,600. Although I think it's unlikely that gold will reach that high, it's still a possibility. Let's also consider the perspective of the final diagonal triangle wave 2, 3, and wave 2,600. No, everything is more or less normal. I just thought that the fifth wave would be larger than wave 3, but it seems fine. Therefore, we keep in mind the strategic target levels, which are far below, but we also understand that to enter the market, we need an impulse, an impulsive move. Friends, the S&P 500 index is also very likely to renew its maximum values, just like the euro and gold. The S&P 500 index will likely move towards the level of 5,750, from where we can consider a corrective decline, which could be quite significant. This is because we have wave 1, 2, 3, and 4, and now wave 5 is forming. After wave 5, there could be a very good correction down to the loss level of the market maker, which is at the lower boundary of this same market maker's profit range. The point spread here is very decent, friends. So in short, do not buy the S&P 500 under any circumstances. In case of new maximum values, look for sell patterns and work with the correction. The correction could indeed be very large, down to the level of 5,400. Thank you very much, dear friends. It was a pleasure being with you today. I hope you enjoyed it. If you don't mind, please like and comment. I'd be very happy to respond to your comments. Join the ForexTimes community. Strategic levels and triangles have been working out with great accuracy. Almost all the strategic levels and triangles mentioned in the community over the past month have been successfully executed. Please come and see for yourself. You won't regret it. For now, goodbye, everyone.